All right, so in this video, I want to discuss about two swing trading strategies that you can add to your trading arsenal. I think these are very effective strategies that you can, put in your swing trading repertoire, and you can get a very good amount of profit at a very low risk. So let's talk about them. Firstly, what is swing trading? So swing trading is basically you want to take advantage of the swings in the market. So whether the market is going up, that's one swing. Another swing would be the market going down from here. That's a swing low. Another swing would be something like this, and another swing like that. So the swings keep continuing. So you want to take advantage of any of the swings that are occurring in the market. So for swing trading, basically you are not selling and buying in the same day. We will be holding for a couple of hours, or we will be holding for some days, or maybe a week or two. So that's what swing trading is like. So you want to be buying or selling for a couple of days. All right, having that clear. So, what are the strategies that I'm talking about? So, one of the really good strategies is called stuck in a box. So, what is that? So, basically, a lot of times we see that the market is consolidating and it is stuck in a rectangular pattern, in a rectangular shape. So, this is what I call stuck in a box. So, what is the strategy that we can adopt here? So what I will suggest is when something like this happens, you should be buying at the support zones. You can keep buying at these support areas, and you can sell or keep a target of the resistance zones. And how do you confirm the entries? You can confirm the entries with your candlestick patterns. So, for example, we can see a doji formation here, another doji here. We can see a bullish harami here, a bullish engulfing here. Same is the case here, bearish harami, a dark cloud cover, and so on. So, essentially, stuck in a box is a pattern when there's a consolidation in the market and price is moving in a range for quite some time. So the resistance has been established, the support has been established. So we want to take advantage of these zones already set and ride those swings. So buy low, sell high, buy at support and sell at the resistance. So that's one of the strategies I love to use for my swing trading experience. Another example, this was a chart of TCS. So I'm looking at the 1 day chart. So that's what you want to look at for swing trading. You can go for 1 day, you can go for 4 hours. These are two very good time frames for your swing trading. Another example will be on the Axis Bank chart. I have traded this personally. Again on the 1 day chart. So we can see that the price is consolidating and it's stuck in this region, it's stuck in this box. So what is the strategy again? We'll be buying low, buying at the support zones, and we'll be selling at these highs, the resistance zones. So that is something that you can practice. It's very easy, fairly easy to do. You can combine with your indicators and combine the entry exit with your candlesticks. So that's one of them, called stuck in a box. The other strategy that I love for swing trading is when the markets are trending. So I use stuck in the box when the market is sideways, it is in a range. So that's when you use stuck in a box. The other strategy is called catching the wave. This you will be using when the markets are trending, either up or down. That will depend upon the market's condition. So this is example of Bajaj Finance again on the 1 day chart. So this is around 2019, around December end. So what you need to do in this is you have to ride this wave. And how do you do that? You can either make the trend line. So I will suggest put the 50-day moving average. 50-day moving average is very important support resistance. Just like in intraday, we like to use the 20-day moving average. For your longer time frames, for example, the 1 day, for your swing trades, I will be suggesting the 50-day moving average. So in the 50 period moving average, it acts as a very important support. So you can essentially, so around this time, a new trend was starting to roll, and you can actually ride this trend by buying at these support zones. Again, how do you take the entries? You will confirm your entries by buying low with the candlestick. So over here we have a bullish engulfing, we have a doji at this point, bullish harami, we have an inverted hammer, again doji at this point, another doji at this point, and so on. So with this 50-day moving average, you know that the price will always snap to the support. So always buy at this point. What is your stop loss? It's simple. If you're buying at this point, the stop can be just below the moving average, and targets can be defined using pivots or seeing the support resistance earlier in the time period. And how do you know that the trend is ending? How do you know that when will your price stop respecting this 50-day moving average? So that's also simple. So if you see this, whenever the price was touching my 50 DMA, it used to bounce back. In this case, it used to bounce back. Again, was the case here when the price bounced back. But at this time, around 7 months into this 50 DMA, my price was not able to bounce back, but it started trailing this line. So whenever such a condition happens, you should get alert that now the bullish pressure is not so strong. Already we have seen a move from 2340 to 3470. That's a good 1000 rupee move. So when something like this happens, when you're not able to bounce back immediately, that means buyers are not strong. Now maybe the sellers are approaching, and that's why now 50 DMA becomes your resistance. So that's how you can ride the wave. I'll show you another example on Titan. This is an example on the 1 day chart as well, around 2019 again. So once the trends are established, once the price goes above the moving average, you know that the 50 DMA becomes the support. So what are we doing? We'll continuously buy at the support. Keep on buying at these points and ride the wave, catch the wave. Keep on moving with these points. Your entries can be confirmed with your candlesticks. So keep on moving that, till you go below the moving average. Then your moving average becomes your resistance. So these are two strategies that I love to use when I'm swing trading. So always remember, if you're catching the wave, buy low, buy at the support. Don't buy in the between, because your rubber band will snap and you will make a loss. And if you buy high, you always have a very big stop loss. So try these strategies. When you're consolidating, you use the stuck in a box strategy, and when you are trending, use catching a wave strategy. So let me know what you guys think, and whether you are utilizing this, and you can improvise this, and are you getting results or not. And I'll see you in the next video.